All right, welcome back to Market Day Report. Good news is you've got me for the next 2 hours and 15 minutes. The bad news is you've got me for the next 2 hours and 15 minutes. How about that? Let's take a look at what these markets have got for us on this holiday week. Let's take a look at corn. That's up. Look at that, 7 3/4 cents. See if we can get a 6 out in front of that Dees 23 contract we did earlier. But look, 6.59 3/4 is a March price. That's up 7 3/4 cents. May's up 7 cents to 6.59. We're almost, well, we were over that $6 level on Dees. The new crop 6.02 was the high, but we're only at 5.99 1/4 right now. That struggles to get through that level. Let's take a look at what's going on in soybeans. Soybeans are higher as well. Jan, the front month, only 2 3/4 cents higher, 14.81 1/4. Is last with March up 4.5 cents to 14.84 3/4. There you go. How about the wheat in Chicago? The Chicago wheat. Double-digit gains, strong. March up 17 cents to 7.67 1/2, while May's up 16 1/4 cents right behind it. 7.73 3/4 is the last price there. Hard red wheat in Kansas City, the HRW down in KC, is also off to a double-digit rally. March is up 12 1/4 cents to 8.59 1/4. May's up 11 3/4 cents to 8.52 1/2. How about spring wheat in Minneapolis? Well, that's up 4 1/4 cents in March to 9.20 1/4. May's up 4 1/4 cents as well to 9.12 3/4. Some green on the screen here today, folks. Good day to be a producer. I'm not going to cheerlead too much. March cotton up 49 points there to 88.33. These prices brought to us by Bar Chart, and this content is going to be brought to us by Riley Schwieger from CHS. Let's bring in Riley, see what he's got to say. Good morning, sir. The floor is yours. What say you? Anything stick out at you? Anything interesting?
Yeah, I mean, it's another healthy week for energy. We've got nearby crude up above $78 again for the first time in a couple weeks here after bottoming out at $70 just 2 weeks ago. Supporting that move today, we had the EIA report. We did see a larger than expected draw in crude stocks of around 5.9 million barrels. For gasoline, we saw a smaller than expected build of 2.5 million barrels. And then for diesel, we saw a surprise draw of 241,000 barrels. Kind of supporting that dynamic, we did see refinery utilization drop 1.3%. That's at 90.9% there. For perspective on inventories and where we're sitting, crude is still 32.4 million barrels below 5-year averages. Gasoline is 4.4 million barrels below 5-year averages. Diesel is 9.8 million barrels below the 5-year average. It's not that long ago that we saw diesel the deficit to the 5-year average of over 30 million barrels. So we've made some nice recoveries there, mainly supported by some of this refinery utilization operating at higher average levels. On the crude side, we did see a significant drop in imports of around 15.3%. That has a little bit to do with the pipeline disruption going on. And then we saw exports increase 44,000 barrels. So overall, we did see net imports fall 1.09 million barrels, and that dynamic continues to shift. We continue to be a little bit more active in the export market with some of those SPR releases and just the shift in global supply. Gasoline, we did see an uptick in demand, 459,000, 5.6% increase from last week. On the diesel side, we saw 247,000 barrel per day increase for demand, 6.6 over last week. I still think we're kind of looking more at 4-week averages, and comparing to a year ago for gas demand, we're 7.1% from a year ago, and diesel demand is off 9.2% from a year ago. So that's maybe offsetting some of the draws we've seen for the headline crude. So that's about what I'm seeing today. We set new highs post report. Overall strong week for energy so far.
Yeah, I mean, look, we bounced pretty well off that 70 level. I mean, we're up over 10% from that last low there. Pretty interesting. And then I've seen some research come through our desk, or at least mine, the last few days, saying that the end of, and this probably means it's going to go lower, right? But the end of cheap oil is near. So it'll be interesting to see if a lot of that comes to fruition. But I do know that they said we've got low, we're down to our lowest levels since 2004. If you take out the SPR, maybe it's a lot longer than that. So that story that we had all year this year in 2022 looks to be continuing in 2023. Really appreciate that detailed report. That's great stuff. Riley Schwieger, thanks for being on the show. He's with CHS up in Inver Grove Heights, Minnesota. We're going to bring it back to Nashville, take a quick break, and we're going to come back and talk more livestock with me after this.